My dear friends, welcome to Latest Wealth. Now you have been learning a lot of things about stock exchange. Yes? Hope your knowledge is keep on increasing. My dear friends, please remember, for the new generation, knowledge is the new money. More you are having a knowledge, more profits you are going to make. In stock market or real estate or any investment, knowledge is a first step. Why most of the people lose in the stock market is they don't have proper knowledge. Please equip yourself with a proper knowledge, and to improve yourself with a wonderful knowledge. Today the topic is the terminology of stock exchange. Yes, my friends, some of the terms frequently they'll be used in stock exchange, because when you are doing a trading or stock market investment, these terminology is very much important. You should know about terms. Otherwise, what will happen? Some vocabulary you may not be knowing. Some broker may be saying, suppose if you say, I don't know what is meant, then there are chances that opposite person, he may try to cheat you. And one more thing, this terminology, this vocabulary will help you to take decisions fast. Because when you take the decisions fast, and it will help you to take decisions properly. That's why this terminology is very much important. Please don't fast forward. Please watch fully and understand the terminology. Now let us go. What are the terms used in stock market, or what is the vocabulary of stock market? Let us start. Discretionary order. Discretion. Discretion means taking the decision this way or that way. Yes. So sometimes when you are taking, the owner leaves the decision to discretion of the manager. Sometimes companies give discretion of the client. Same the way, here what happened? A client placed the order to buy or sell the shares at whatever the price broker thinks reasonable. Now tell me, when it is possible? When the client is having so much trust on the broker, in that case it will be happen. Or client is having a complete faith on the broker. 27. X bonus. The share is described as a X bonus when the purchaser is not entitled to receive the current bonus, the right to which remains with the seller. X rights. The share is described as a X rights when a purchaser is not entitled to receive the current rights, the right of which remains with the seller. In next episodes we are going to deal with what is bonus share, what is rights issues, what is preferential issues in detail. 29. Forward trading. What is forward trading? Forward trading means very simple, my friend. Suppose you are coming into agreement with one person. You have done agreement today, but you are deciding the future rates today only. So what will happen? Suppose you want to sell any goods. It comes in future so and so. For example, I want to sell that my particular goods at 1000 rupees per kg. Even though rate may be 500 or 600, you don't know. That is future trading or forward trading. Same the way here in stock market, forward trading refers to the trading where contracts are traded today and settled at some future date at prices decided today. 30. Good bad delivery. Good delivery means a share certificate with its transfer form meets all the requirements of title transfer. Means terms and conditions, bylaws, rules and regulations, what are all the requirement. If it fulfill all the requirements prescribed by financial authority, then it is called good delivery in the market. Whereas bad delivery means some of the share certificates together with the deed of transfer. Suppose if it is not meeting the bylaws, if it is not meeting the rules and regulations, terms and conditions for seller and buyer, when it is transferred from seller to buyer, it is called bad delivery in the market. 31. Hand delivery settlement. Under this method, delivery of securities and payments are affected within the time stipulated in the agreement or within 14 days from the date of contract, whichever is earlier. Most of the transactions are conducted on the basis of hand delivery settlement. 32. Insider trading. What is insider? Insider means who is working inside. Same the way in trading means doing the transactions. That means when the person who are directly associated with the company, they are having a tie-up with the company. If they are doing trading, then it is called insider trading. It means trading in a company shares by person who is associated with that company. As a result of his association, he knows some of the secrets of the company. So he has a secret price sensitive information. For example, expansion plans. He may be having idea about financial results, or he may be having idea some company is going to sell that company properties, or there is a change of management, or there is a change of business plans, or there is a new research and development, or there is a failure of some person, or ill health issues of managing committee, whether they are going to give bonus or rights issues. So what will happen? He will tries to exploit that information and maximize his profit. Sometimes he want to minimize his losses also through trading in the script of that particular company. Actually, it is a crime, and hence it is prohibited by the stock exchanges. So sometimes what will happen? The person may not directly do the trading. On binomy names, he may be doing trading. Actually, it is also offense and crime. 33. Jumbo certificate. Jumbo certificate, jumbo share certificate is a single composite share certificate issued by consolidating a large number of market lots. So in one particular share certificate, they will give all the details. That is called jumbo share certificate. Now, very important thing, 34, jobbers. A jobber is a professional independent broker who deals in securities on his own behalf. Like a broker, he does not purchase or sell securities on behalf of a client for a commission. Instead, he purchases the securities in his own name and sells them out when the prices of those securities increases, and thereby a net profit. He is like a stockist of security of different companies. He buys securities as a owner, keeps them for a very short period, and sells them for a profit, known as jobber's turn. He works for a profit and not for a commission. Please remember, he works for a profit, not for commission. 35. Lame ducks. Lame ducks means we can make it as a failure people. Actually, lame ducks are the bear brokers. So what happened? These bear brokers expect market is going to crash, market prices are going down, so definitely there will be decrease in the prices. So what happened? With that thinking, with this analysis, with this fear, they sell the securities, ultimately at a loss, because they have made a wrong move. They think market is going down, but reality market prices are going up. They lost in market due to wrong prediction. Reason whatever may be, their analysis may be wrong or their emotions may be wrong. So what happened? They think market is going down. With that they'll sell. After that, reality market prices are going up. Generally, they contract to sell securities which they do not possess. Therefore, they are caught in a wrong foot. They are called lame ducks. 36. Limit order. It is an order for the purchase or sale of a scrip at fixed price specified by the client. That means if you are an investor or if you are a trader, if you are a client, what you can do is you can fix some particular price for sell or buy. For example, sell 500 shares of Wipro at 400. That means you are giving standard instructions to brokerage firms. You can sell my 500 shares of Wipro when it reaches 400 rupees. 37. Market lot. That means each company, each stock will be specifying, if you want to buy some particular stocks of a company or particular scripts of a company, company says minimum this many stocks I have to purchase. Like when you go to Super Bazaar, some of the items they say minimum 6 pieces you have to purchase. If you go into wholesale market, minimum 10 pieces you have to purchase. Like this, companies will specify. So market lot refers to minimum number of shares of a particular security that must be transacted in the exchange. Market lot may differ from company to company. Some may be 10 shares market lot, Some market lot may be 20 shares, some market lot may be 50 shares, some may be 100 shares. Multiples of market lot may also be transacted. Actually, in Demat scripts, market lot is 1 share. 38. No delivery period. Actually, whenever a book closure or record date is announced by a company, the exchange sets no delivery period for that security. So what will happen? During that period, trading is permitted in that security, but delivery will be postponed. However, these trades are settled only after no delivery period is over. The reason is, this is done to ensure that investors' entitlement for corporate benefits is clearly determined. 39. Odd lot. A number of shares that are less than the market lot are known as odd lots. Under the scrip-based delivery system, these shares are normally traded at a discount to the prevailing price for the marketable lot. 40. Order-driven trading. It's very simple. Name itself indicates it is a trading initiated by and sell orders from investors and brokers. So whenever people are giving order, then only buy will happen. Whenever the people giving the order, that time only sell will happen. 41. Over-the-counter trading. Over-the-counter trading means, in earlier episodes we have discussed, in stock exchange some of the stocks are listed stocks, some of the stocks are not listed. So what happens if some trading is happening in the non-listed stocks? That is called over-the-counter trading. That means you are not coming to stock exchange, you are directly going to the management of the company or through some links or through some agents or brokers. So you are going to purchase directly the shares of that particular company which are not listed. Sometimes it will happen before the company listing, so that when the company lists, these are already people, they are already shareholders, they will be continuing as a shareholders. 42. Open order. Actually, it is an order to buy or sell a security received from a client. Some of the cases, what happens, client will not fix any amount, time limit or price. So what will happen? It is almost like a similar to discretionary order. So for the execution, client may not fix any time limit or price. That is called open order. 43. Pay in. Pay in days, actually they specify some days on which securities or funds are delivered or paid by the members to the clearing houses of the exchange. So they specify the time period. This is called pay in. Pay out. Pay out means same, it's opposite of pay in. Payout is the designated day on which securities and funds are delivered or paid out to the members by the clearing house of the exchange. 45. Price band. Price band means sometimes what happens during the volatility stock market, when stock exchange predicts some volatility, some wrong practices, sometimes SEBI comes into scene to regulate the things. They will fix the price band. Price band means the daily, weekly price limits within which price of a security is allowed to rise or fall. So within that limit only price of a stock has to go. If it crosses, immediately they may introduce circuit breaker. 46 is price rigging or rigging the market. First, rigging. What is rigging? You might have heard in political parties. During the election time, some parties do. This is actually illegal activity. What they do, rigging means they may go into polling booths by any means, by hook or crook, or they manage the people so that they put the votes for some particular party, so that a particular party will come into majority in particular constituency. That is called rigging. On behalf of others, they create artificial voting. Same the way here in stock market, what they do is they'll form like a group, or they are having a tie-up with some other companies. There are two ways of rigging. Either to bring price up, artificial up, or artificial down, just by creating artificial demand and artificial supply. This is called price rigging or rigging the market. According to law, it is undesirable activity. So law has prevented this one. So what will happen due to this rigging? It prevents free interplay of demand and supply. Actually, stock exchanges and SEBI try to discourage these practices. 47. Quote-driven trading. Trading where brokers or market makers give buy or sell quotes for a script simultaneously. At the same time, they can give buy or sell. That is called quote-driven trading. Next, 48. Record date. Record date means company during their annual meeting fix one particular record date. So that what will happen? By that record date, whoever owning the shares, they will be eligible for some corporate benefits. So record date is the date on which beneficial ownership of investor is entered into register of members. Such as members are entitled to get all corporate benefits. For example, when it comes to bonus shares, company will tell so and so is the record date. So if you are already purchased shares before that record date, that means you will be eligible for that taking bonus shares. 49. Rematerialization of shares. It is the opposite of dematerialization of shares. Suppose you are having shares in digital format or electronic form. If you want to convert into physical form, that is called rematerialization form. Of course, generally nowadays it is not there. 50. Screen-based trading. Screen-based trading means you are doing all the transactions on the screen, not on the offline. When buying or selling of securities is done by using the computers and matching of trades is done by a stock exchange computer. That is called screen-based trading. 51 is settlement. It refers to the script-wise netting of traders by a broker after trading period is over. After the trading period, all the computers and electronic network will start doing, and they start doing the settlement. Settlement done by depository participants or stock market exchange. All this network. 52. Settlement guarantee. Settlement guarantee is actually, this is a guarantee provided by clearing corporation. There are some clearing corporations, they will give the guarantee on behalf of the buyer or seller. So what will happen for settlement of all trades, even if the party defaults to deliver the securities or pay cash, they will take the responsibility. 53. Splitting or consolidation. The process of splitting shares that have the high face value into shares of lower face value is known as splitting. The reverse process of combining shares that have a low face value into one shares of higher value is known as consolidation. It is just like that. Suppose you are having a big one commercial property. Now the locality has become very prime locality. For one particular commercial property, rent may be 10 lakhs per month. You know that for the people it has become too costly. In that case, what they do? They do the partitions in the property so that each partition will become smaller. Then they can charge less rent from each tenant. Same the way, when stock price is going too high, in that case company will split stocks into smaller prices so that it can attract more investors into market. Reverse is consolidation. If stock price is very low, they add up 2-3 stocks and they make it as a consolidated stocks. 54. Spot trading. This spot trading is trading by the delivery of shares and payments of the same on the date of purchase or on next day. That is called spot trading. 55. Stop transfer. It is the instruction given by the registered shareholder of the shares to the company to stop the transfer of shares. Actually, earlier he might have purchased the shares due to some reason. Theft might have happened, or misplacement, or loss of share certificates, because it was happening during the physical, when the shares are in physical format. Of course, still some people are having, now government has made it mandatory that all the physical format shares you have to convert into dematerialization format. So stop format, it's instruction given by investor. 56. Stags. Stags are those members in share market who neither buy nor sell. You may be wondering, yes my friends, they neither buy nor sell the securities in stock exchange, but they simply apply for the subscription to the new issues. When IPO is coming, they apply for the new issues, expecting to sell them at higher prices, because after some time or later stage they want to sell at higher prices. When the issues are quoted in stock exchange, generally stocks buy new issues and sell them on the allotment or even before the allotment for a profit. Since they act fast, they are called stocks. Stocks fast runners. 57. Spot delivery settlement. These transactions are to be settled by the delivery and payment on the date of contract or on the next day. 58. Special delivery. Delivery and payment made anytime exceeding 14 days but not exceeding 2 months following the date of contract, as may be stipulated when entering into bargain and permitted by the governing board or president. This is called special delivery. 59. Stop loss order. It is an order by the client to sell as soon as the prices fall up to some particular level, or clients sometimes give instruction to buy when the prices rise up to certain specific level. That means he want to sell when the prices come down, he want to buy when the prices rise up to certain level. This is mainly to protect clients against heavy fall. Sometimes stock market may fall or rise. So to protect against heavy fall and heavy rise, he will give the instruction in prices so that they may not suffer more than pre-specified amount. That's called a stop loss order. 60. Trade guarantee. Trade guarantee is the guarantee provided by the clearing corporation for all the trades that are executed on the exchange. In contrast, guarantees the settlement of the trade after the multilateral netting. 61. Transfer deed. Transfer deed is a form that is used for effecting transfer of shares or debentures and is valid for a specified period. It should be sent to the company along with the share certificate for registering the transfer. The transfer deed must be duly stamped and signed by on or behalf of the transferor and transferee and complete all the respect. They have to follow certain rules, regulations, terms and conditions. It is just like in real estate also. When you are having one house, if you want to transfer that house into some other person, you have to follow the government rules of revenue department. Same the way here, when you are transferring, you have to follow certain rules. 62 is wash sales. Washing means cleaning, right? Same way, you want to clean the market. How? Actually, it is one kind of fictitious sale. Fictitious sales, some of the people, they want to reap huge profits by creating misleading picture in the market. How? Suppose one particular script they will select. They do fictitious sale and then make a purchase of the same security at higher price through another broker. He only selling, for example, 100 rupees. He buys same shares with some other broker for 150 rupees. So what happened? 100 to 150 raises happen. Like this, they do some fictitious sales. So they will send the signals to the market that, oh, some particular script is going very high. As a result of false opinion, when the prices of security actually rises, speculators sell it to earn a good profit. Actually, this is not legal and ethical also. Please never do this one. Wash sale is a kind of cheating. Hence, stock exchanges impose severe penalty on such cases. 63 is wolves. These brokers are who are fast and smart, just like wolves. Have seen in the wolves how fast they run to catch some animals. Same way, they are very, very fast. They quickly pursue changes in the trends in the market and trade fast to make profit. They are very, very fast runners. They are having high equipment, high analytical skills, high perceiving skills. They are generally not caught in wrong foot, even though they are doing some mischievous practices, but they go legally. That's why they are not caught. These are called wolves. with this, we are coming into conclusion of this episode. However, in future, we are going to create some more videos. Hello, my dear friends. Hope you have watched fully. You got some new knowledge. Hope by watching this, your confidence level might have improved. My dear friends, first time the terminology may look like a little bit difficult or confusion. Actually, that's why I recommend you watch it 3 or 4 times. If you want, you can watch along with your family members, discuss with your family members, and today watch some terminology and check in the net, check in the newspapers, and cross-check with your intelligence, right? Cross-check with your knowledge so that it will improve your financial IQ. And thank you for watching. Keep watching all our videos. Please, if you are not subscribed to our channel, subscribe to Latest Wealth. There you are going to get some other wonderful information. Thank you very much. Till we meet again, enjoy every bit of life. Have a nice day and bye-bye.